Good turnaround Tuesday, everybody. Alexander, how are you? Brock, what's going on? Hello, Sinatra. Hope everyone's doing okay. Had a decent Monday. Aussie keeps marching. So with the dollar index only 20 pips away from new highs for the move, Aussie's resilience has been outstanding. I'm wondering if the dollar breaks out and moves to new highs. I really don't think the Aussie's going to make a new low. We've had 210 points here. So even if the dollar can rally and break out, this is the one to buy on a 100-point pullback, in my opinion. You know, back here, if that happens. The gold's trying to rally, even though the yen has follow through, it's not much, but I still don't think you could fade it, even though yields are lower. They're coming in lower. And they tried to turn S&Ps. Last night they were lower and reversed, and same with NASDAQ, but they're trying to fade. You know, I had this line here, and it sure closed lousy, and now it's back above it, but really not that impressive. So I really don't know what to do. I'm conflicted with this. We could get another low, couldn't we? 43.30 is important. Ronit's going to be with us today. So, I mean, you could get another new low. Here's one, here's two, and here's three. It's possible we try take out 260 again. 4,100 is a 200-day moving average right here, I believe. Well, it's a little bit above it, but it's 41.81. Okay. Euro still really can't get out of its way. Still looking negative, and I still think there's a shot for a new low here. It will diverge for the second time, and that comes in under 115. Euro pound, I think, is finally given the guys their breakdown that they've been looking for. So, you know, if you've been hearing face, you haven't gotten long euro pound. And you have crude trying to come back. You know, I would, on the 2 hour, it was a confirmed high up here. See this high, and then see this RSI reading, which was higher than here. Okay, why don't you save it for your interview? And hi, Ryan.
Morning, Dale.
Ronit's doing his interview before the bottom of the hour. Anyway, everyone wants to share. I understand everyone wants to share their ideas, but anyway, you know, see this. So if we can manage another pop higher, I might attempt a short here, even though crude closed higher on the day. It left a pretty nice wick, but you know, I still want to see what it could do at new highs and see if we don't confirm. VIX is trying to hold, you know, this 20 area, and it's possible we're already getting a fade in NAS and S&Ps. So I don't know. I know a lot of people are looking for that 4,100. I really don't think so. I know that a lot of people, Ryan, have you heard someone saying there's some big day on the 13th of October? You know, that there's going to be some type of U.S. government action about the financial system or something. You know, probably
no,
just
I haven't. No,
yeah,
that's tomorrow, isn't it? Yeah.
Yeah, probably just another conspiracy theory. Anyway, silver is weaker than gold today, and you guys know I've been looking for a place to buy gold. I haven't pulled the trigger yet. Want to see what happens. I really can't get bullish to metals until I think the yen has peaked. What do you think, Ryan? I mean, what's above it now? 114. I have to almost go to a weekly to see, you know.
Yeah, you have to go wide on this one. Yeah.
Yeah. So, yeah, I
go
don't. That doesn't
wider
look.
than that. Yeah.
Yeah, that doesn't look like a short to me. So, until that calms down. Okay. So anyway, let's see, one of our people can't hear us. He needs to log out.
Take his mute off or something. Yeah. But yeah, what the big area for me has always been 114, 115. Absolutely huge.
Yeah, that goes back how many years?
Yeah, so we've got a couple of levels. The next level for me is around sort of 1370. But you're coming off that period you can see there in 2019, those high areas. But it's small fry compared to the 114, 115 area.
Okay, and you're getting your break in EG.
Oh, don't talk to me about that bloody thing. I got stopped on my. I was short on the break attempt at 85 last week. I got stopped this morning at 15. Then I went long at 06 because I thought, okay, we failed yet again. Maybe we're going to build a bit of a base at 00. And I threw that in at 86, and now I'm just sitting on my hands. I'll let it do its thing. I'll worry about it after.
Yes.
You don't want to burn all your profits away on a core position, messing around with these little spikes and things.
Yeah, and making your broker money.
Yeah, definitely. Don't want to make that money.
Unless you go to Forest Park FX and you could get rebates, and you could churn your account and have a rebate check every month. I don't know. They 1099 you on a Black Monday was October 19th. So Jane is saying, there's, some of these anniversary dates coming up here. October, always being the scary month. Black Monday, yeah. I remember that day. How old were you in 1987, Ryan?
Oh, how old was I? I was 15.
Okay, funny. Okay, so I was.
I wasn't interested in Black Monday at all, mate.
Hey, what were you doing that day?
Dale's gonna go. That's funny. I was in my 60s.
I was already on Social Security, but I will tell you, I had a penthouse office in Phoenix on Central Avenue, and I did go downstairs to see if the bank was still open. And they didn't even know what was going on. Everything's normal, Dale.
What did you do? Take a loan?
Huh? No.
What did you do? Take a loan?
No.
In case I went bust today.
I was thinking I wouldn't have to pay back any of my loans. Anyway, Tim was 5 years into the business by then. Okay, well, thank you. It's good to have another dinosaur in the room with me. So anyway, I don't have a lot of strong, compelling conviction on almost anything here. So, I'm still in a wait and see mode. I bet Blake has ideas that he's executing. Do you?
I've always got ideas. The thing is we are, the dollar continues to consolidate not too far from its highs.
Right.
And it's just.
Is it going to take them out, Blake?
Maybe we wait on the inflation data for tomorrow. I mean, maybe that's it. Maybe the CPI. It's just, like I said, it's more of a consolidation at the highs, and we have the reversal from last night is pretty significant. I mean, I think it's pretty significant. Let me rephrase that. The reversal that we've seen in European trade today is significant. Not so much yesterday
in equities.
It's what we've seen overnight. And Ryan, was there any headline that, because from what I understand, there isn't. And matter of fact, I was looking at some of the if there's any headlines out there, there's going to be more defaults in China. Some different real estate developers are actually defaulting. So, but the market seems pretty comfortable with it that, hey, it's, China's not going to let it get away from them. So, who cares? This is just more of a deflationary type of event for China. And, it's not going to really affect us a whole lot here in the US. So, status quo. But are there any headlines that really moved the market overnight?
Nothing major, a few little bits and pieces. Ships are starting to get turned away from a port in the UK because they can't handle the traffic, but the same is happening in LA and other ports in the US. So it's a
we had because of that situation here at the ports in California, we had a very bad oil spill because those ships out there, when they drop anchor,
they checked the pipe.
Yeah,
didn't they?
yeah.
That's
Orange
nasty
County,
looking
Blake.
there in Southern California.
Yeah, Orange County. I mean, it's really it's a bad spill. Really bad spill.
Yeah, I read that. It was very bad.
Hey, Blake, when you look at the daily S&P chart like that I have up here, and then why don't you take the charts? Is there anything that bearish that you see? I mean, I know it was bearish for a while, but I look at this and there's nothing that bearish that I see on that daily chart.
Well, if you pull up the daily chart right now, I don't, other than we're making lower highs and lower lows, and you can see this like very, small
nice
wedge.
look.
We can't ignore the fact that we came out of the ascending wedge, and we haven't even reached a 24% retracement. So we haven't even met a minimum expectation coming out of a wedge. So a minimum expectation I would expect is below the 200-day moving average down here at 4,000, roughly just a little bit above 4,000. That's ultimately where I feel that we're going to go. But I don't, I'm looking at the chart here, and the way I'm seeing it right now is that, here, let me grab that drawing tool again. Kind of the way I'm seeing it right now is, we might just bounce around inside the wedge. Yeah, and the risk is that people try to buy it here on this breakout right here, and then it, catches everybody on the long side and takes us just a little bit lower. But, I think, correction from here is all right. It's not, but it's not going to make it there in one fell swoop. And
where would it break out on the upside of your wedge? Where would
4420.
Thank you.
Yep. 4420. I mean, it's right here. So we have to break that. That's just, just above the 618 fib, just below the 78% retracement that comes in at 4420.
So if you're bearish, I'd keep an eye on that area if it starts taking it out.
Yeah, of course. Yeah. And actually if you, read the, the overnight analysis in the S&P for right here, it says the end of the wedge top is holding while we are below the 4420 level. The risk is for a move to the 4250 level key support once again, because we are in this wedge. So, for a retest down here, it seems quite possible. But like I said, what's really interesting to me is the overnight move that we've seen. And remember that analysis that you see there, it's on, the overnight analysis is on every instrument that we cover there. So that was just the S&P. But
very handy.
This support here is what I think is going to be key for the market. It seems right now that the market's pretty reluctant to trade, much below 4,300 in the S&P, but we are making lower highs and lower lows. So let's keep that in mind. I mean, if you just,
and it's still October.
It is still October, and October 19th is the 1987 crash anniversary. And I don't know, you were
60 then. Yeah.
No, you were 60. No,
in
but
1929, I was only 55.
Oh my gosh. I'm sure, in 87, like, Ryan said, Ryan and I are the same age. We were, we were young pups at that point. I was still in high school. The last thing on my mind was what was happening in the financial.
What was her name that was on your mind?
Oh God! What were their names? I don't.
Oh, here we go.
Oh, good one.
So, but anyway, I guess what I'm trying to point out here is that we are still in the month of October, which is, it's definitely a month that could still see some downside pressure. I think October and November are both very, difficult months for the equity markets, generally speaking.
You know what, Snowball, I'm seeing rolling more and more at the moment, the stagflation one. More and more I'm seeing that, crossing over people's Twitter and, just in headlines. And You know,
Is the
that's
what?
growing
I'm
and
sorry.
growing. Stagflation.
Stagflation.
You know, that thing.
And
that thing
can
you banned me from saying about months ago.
Yeah, it's really a bad. I mean, look, no one wants a stagflation environment. I mean, it's just because when you have, you know, high inflation, that's already a problem. And so if you have, in this case, stagflation would be, what is it? Would
the economy is weak, but inflation is strong.
Yeah, and unemployment's lower.
Yeah, but the weak economy is usually combined with like weaker employment. And man, that's a killer, right? And you know, if you have, you know, stubbornly high inflation and, you know, high unemployment, I mean, that's like the
because what could the Fed do if they want to stop the inflation? To tighten is going to make the economy worse.
Yeah,
but Volcker did it. I mean, but there's no way that any Fed chairman would ever do what Paul Volcker did in 1980. He took rates up to, you know, short-term rates to almost 20%.
Well, he was a case on exactly what the Fed knows is the cure for very high inflation, right?
Yeah.
Like, so the Fed, you know, from that point forward, the Fed knows, hey, inflation will never get out of control as far as we're concerned, because we'll squash it real fast. We'll just raise
50 years
really quick
for it to.
I know. Could you? I mean, I was talking to my you know, my parents about, you know, rates back then, and you know, for their home purchases, and
what was it, 14-15% mortgage?
Like yeah, exactly. They're like crazy. Justine asked, are the treasury bond yields and stock indices negatively correlated, and why? And that's a good question. I mean, yes, yield to a certain extent. You know, it's kind of like you know, higher yields. And Ryan, you can jump in here, and Stelios, I think, should be here, because Stelios is the king of yields up,
king of
down.
What?
Yeah, you know, the king of bald people. Stelios is what you are. Just kidding. God,
how can you tell with his crown on?
You know, but I want to say that you know, yields going higher is kind of like when crude oil goes higher, right? You know, crude going higher tells you, oh, the economy is strong up until a point. Then there's a point where it morphs to, oh my God, higher crude oil prices is going to kill the consumer and it's bad for the economy, right? I don't know. No one ever knows where that breaking point is for the market. Same thing with yields, right? Yields moving higher. You know, people feel, oh, you know, hey, that's a sign of a strong economy. We've got yields moving up, you know, the market can absorb that. It's, you know, we're making headway. And then all of a sudden, you know, there's a breaking point. And Stelios has talked about that, right?
Oh, I don't remember. Was I drunk? No, I'm kidding.
You might
yeah, I mean, you're absolutely right. And, you know, yields start going up. You have savers who start making, you know, on their deposits, which, by the way, for the past 10, 15 years have been annihilated. And so you're absolutely right. There's a limit for yields and for oil, and you know, after which it becomes a hindrance for the economy. And you know, speaking about oil, something we didn't mention yesterday, I think, you know, with oil above $80 now, and clearly the problem being supply issues, and you know, the whole problem with the whole world basically now, you know, with the supply chains being so broken at the moment. I think we're going to see, I don't want to say when, but I think we're going to soon see producer hedging. So this, you know what it's like. You have a product and you see that spot is high. You want to lock in, you know, these prices for as long as you can. So you're going to see that, and that's going to bring some downward pressure at some point for oil. So I think it's going to start stabilizing. You know, Steve has been speaking about $100 oil. I think we might see that, but I think first we're probably going to see some kind of reaction. You know, I want to say around here, but obviously it's very difficult to time this. But yeah, overall, it's a very difficult situation for central banks. We've said this many times, and I really don't know what I would be doing if I was in their shoes. We are seeing today, after the UK numbers, we got average earnings index plus bonus 7.2% year on year, and this is very high. Obviously, inflation is also high, but you're seeing earnings going higher as well. So this has caused markets to be pricing now fully a 15 base point hike by December by the Bank of England. I know it's not a lot. It's 15 base points, but it's now being priced fully. And now they're talking about, early next year, maybe, chances are rising for another hike. And I think the markets might be getting a little bit ahead of themselves. And
I was gonna say something about that. And Ryan, feel free to jump in here too. And that's the interesting thing is we had all of these really, really hawkish comments. And I was talking to Mark Chandler of Bannockburn. Matter of fact, there's going to be a video out a little bit later today. I did an interview with him because he was talking about, we're continuing the discussion about rates and how he calculates short-term rates. And then we start, discussing about, kind of the rate picture and, with all these central banks, whether it's the Bank of England, which you had all this hawkish commentary that came out over the weekend, the Bank of Canada, and then here we go, got the Fed, and you got, we were talking about like the yen pairs and carry trades and how carry trades, this is a pretty clear signal that carry trades are coming back into play. So for those of you that did not trade in the early 2000s, you are in for a nice little treat probably in the coming months as most central banks move off zero bound, and Japan's, they're paralyzed. They're not going anywhere. Yeah, so
what's your favorite carry trade, Blake?
Well, I wanted to say the thing about the sterling is it closed on its lows yesterday, which I found really interesting following all the hawkish comments over the weekend. So Ryan, do you have anything that you wanted to add to that? Because
we've been talking about that this morning in the chat room. I think we're facing two scenarios. The first scenario is that central banks are going to be obviously ending QE. The next phase is to get rates, is to remove what we call what I'm calling the emergency part of rate cuts. So that's the Bank of England going up 15 pips to 0.25. That puts them on a normal keel, if you like. It takes away the emergency measure. The going forward is when you start to think about normalization and a rate cycle. You're going to get banks and countries who are going to go quite fast. Emerging market countries, they always move faster and harder than majors. You can put the RBNZ in that basket. People talking about 50 pip hikes and 4 rate hikes and whatever. But I think it's going to be much, much slower for the majors. The Fed, I think the Fed probably get the rates up to 0.5 to 1% perhaps, and then they'll stop and look for the long road. And that's going to be dependent, obviously, on how the data evolves. If we see growth trending higher alongside inflation, your rate hikes will come quicker.
Yeah,
if we don't see growth matching inflation, that's when it gets a problem, and that's when we start, worrying about stagflation.
Yeah, and I was going to say, really, what comes into view is middle of next year, and you guys know the middle of next year is a long time away in the markets. I like forever and eternity. So what happens between now and summer of next year? There's a lot that could happen, right?
It's a lot, but we don't trade what happens then. We trade the expectations for what happens then. That's what moves the markets. That's what correct. I love trading, the expectations, and they change daily sometimes.
Guys, you guys were talking about rates, and Blake talking about it, that most people think it's an improving economy. Well, go back and look at any country that's having problem with their currency to stop capital outflows, that rates go up, and it's not because their economy is strong. It's because their currency is weak.
Yeah. And so, that's always the thing against, and that's always the big thing with emerging markets. If the dollar starts taking off, it causes all sorts of problems. Yeah. But you talk about the carry trade. Did you know what one of the best carry trades was over the last couple of years? Nope.
What?
And it was being used heavily in Japan.
Euro Mex.
Nope. It was Turkish lira, Japanese yen.
Oh my
And that's what caused that New Year's flash crash. That's what caused that New Year's flash crash. Everyone was looking elsewhere, but it was TRY, JPY that caused that flash crash.
I was just going to say it was the Turkish lira something, but
because Japanese investors were massively playing the carry trade in that because it was huge. It was absolutely huge.
And boy, you take a trade like this, and that was the flash crash there.
Yeah.
And boy, but people could really come back into this at some point. Well, I guess that's more with Turkish, has to do with more with Turkish politics. I mean, you ask Stelios. Stelios can't wait to go back to Turkey, right?
I've never been, mate.
Steve's got all sorts of opinions about Turkey too. I don't even know if Steve's here, but I'm sure he's got a lot of opinions about Turkey. I don't trade the lira. There was a lot of risk surrounding the lira, months ago, and or actually last year. So our feeds over at JP Morgan got cut off at some point. So
good luck getting a good spread in it on a retail platform.
Yeah. I mean, I have a hard enough time trading the rand sometimes with the spreads are so wide that to take pretty small positions there. But anyway. So what other things that should, I guess what I need to go back, let's take a little bit of a, go a few steps back and talk about like the reversal that we saw in Europe last night. So this is what I actually was quite surprised, because yesterday we had a move. We were, trading higher in US equities. By the end of the day, we closed at the lows, so this is the S&P that we closed like right around
65, 60.
And my buddy who's been trading a lot, he's a real estate, commercial real estate guy, like one of my best buddies since childhood. He texted me yesterday, and he's been trading a lot. Don't ask me why. He's just he's one of those, he's kind of into it, and he's probably done pretty well over the last couple months doing whatever he's doing. So he's like really active in the markets, and then will happen like, a lot of people, he'll have a bad trade and he'll be like, I'll just go focus on real estate again. Anyway, he was texting me yesterday, and he's like, oh man, big reversal in stocks today. And I said, yep. And it sets up perfectly for turnaround Tuesday. And he's like, for longs? And I'm like, yeah. And he's like, oh, that's not what I wanted to hear. When people like they look for confirmation bias from you and they don't get it. That was one of those situations last night. But I was actually quite surprised that we were up this morning and we saw that pretty big reversal. So let's figure out why that is. And if you look, that was around the 618, that was of this spike low, but really it's the 618 of the entire move, right? So it held what we would consider as a key fib.
So bulls will say this pullback's an ABC and we're going up now.
Yeah, and I would say in order to be bearish at this point, you have to break those lows. So and I'm not saying that it can't happen. Wow, what just happened to the dollar?
Oh, we've had a little break.
Yeah, I mean, look at the euros trading at like lows of the session. I don't know what happened there. I mean, I know the dollar's in a bullish wedge. I mean, so that I know. That's a given. But I don't know what just gave the dollar some giddy up and go like right now. Look at the dollar index, 15-minute chart. Like, if you're short the dollar right now and you were
they're going to go for the stops now.
Yeah, you were just trading the sterling on the long side or the Aussie on the long side, because by the way, everybody and their mothers, let's talk about the Aussie for a second before I let you go. Yeah, everybody is long Aussie. Everybody. I love Greg Horvat to death. He's not here to defend himself, but he put out a pretty bullish piece on the Aussie dollar over a week ago, right? So he was like one of the first ones to be bullish the Aussie. He thought that the Aussie was going to break out, and this is at 73 cents or so. Then I'm not going to name all the different places that are very bullish to Aussie, but there's a lot. And the Aussie just took out this, descending trend line. But what I was looking at this morning is this, because, if you think about the Aussie being in a consolidative pattern, then, and you want to see that it's symmetrical, which symmetry, happens to find itself into the markets quite a bit. And in a symmetrical triangle would cap the Aussie around 74 cents. So for me, I'm just going to keep an eye around the 74-cent level. And like I said, everybody is bullish the Aussie right now. Everybody. And so everybody that I've been seeing, I haven't seen anything different. So I want to see how it acts right around here.
Do you reckon too many people were waiting for 70, like some of us were?
I think there's a lot of people that are waiting for 70, but I'm not. I mean, why have an attitude? Oh, I was waiting for 70, so I might as well pay up to 73, 75 right now. No,
yeah, I understand that. But yeah. That's a mentality you come up against sometimes. If it's not going down there, I'm going to buy it where I can.
Yeah, I mean, I think I agree with that mentality, Ryan. But I also agree that when I'm actively searching for a long or a short, and I'm wrong because it doesn't reach the target that I was looking to take or participate in that trade, then I'll look for some other pattern setup. So, maybe, you got people that are chasing it long because they're looking at it like this, where it did break out today. And I mean, maybe. So
Aussie's one of those ones where, you see it trading up near 74 and you think, okay, if it dips to 73, I'll buy it. And then we'll get a big sell off to 73 and you'll go, oh, don't like the look of that. I'm not going to touch it.
Yeah. Then when it comes down to 73, you'll be like, I just don't feel like it, because it's usually what's happening at the time, right? Like, what else is, Aussie's dropping to 73 cents, but gold just broke, 1700. And you're like, yeah, well, I don't want to buy Aussie now. Right.
Yeah.
Anyway,
and this is why you stick to your planned levels. I'm not really interested in touching Aussie until 74, and then I'll see how it fares there. I'm not going to touch Aussie until it gets maybe even down to 72.20 again.
Right.
And you've got to be rigid, even if it means missing out. Like we're just saying, you don't want to go chasing stuff. That's when you get in trouble.
Yeah, and that and that was the gist of my my chart of the day yesterday. If you guys go to the blog, you can see the chart of the day yesterday. By the way, I just realized what the time is. I don't want to bleed into Ronan. Seems like he's chomping at the bit to get on.
He's already done his interview through text.
I just want
thank you, Ronan, for being with us today.
Yeah, we'll catch you tomorrow. All right, see ya. I just want to mention that we actually extended the offer. We got a couple of requests from some traders that were trying to, because not everybody can, uses a credit card. Anyway, we pushed this out a few days. So if you guys want to take advantage of the special pricing offer, you can. It will probably be good for a few more days, and then we'll turn it off before the weekend. Just want to let you all know that, and then you won't see those prices again, at least till the end of the year. Maybe the beginning of the year. So have a great one. And Dale, I'll let you take over. I'll see the rest of you guys and gals. Hey, remember, if you're a Forex Analytics subscriber, we go on the morning edge in 45 minutes with myself, Steve Volge, Stelios, Bulgarides. And how do you like that, Steve? Huh? Steve Volgarides. So we'll see. Steve, I just mutilate his name every time. Yeah. I actually finally got Contagoulis correct, right? Stelios, how's that?
Bravo, Blake.
Hey, thank you. That only took me 5 years. So we'll see you guys on the morning edge, where we cover all the major currencies and all the major indices, and pull up the bias chart. Then Steve goes on for another 15-20 minutes talking about anything that you want to talk about. So we'll see you guys there. That is for the Forex Analytics folks only. We'll see you. Have a great one, and thanks for joining us today.
Cheers, guys.
Thank you, Blake and Ryan and Stella.
Bye.
And Ronit, now that we know everything that you have on your mind today, but we haven't seen the pictures, so we haven't seen your charts. So looking forward to talking to you and Welcome back, buddy.
Hi, Dave.
Hi, Ron. It's got
how's it going?
Good.
So,
Good. So you have a lot of conviction across the board. You usually do, and I like your intermarket relationship work that you're doing. But I saw this. You sent this to me on Twitter. So what are you trying to say with the PEs that it's we haven't quite gotten to 2000 levels, but it's still extreme?
no, the price doesn't matter. It's the cycle. If it hits a focal point. So it's something like what you do with an ECG machine. How does a doctor know that you are going to have a heart attack? He actually sees what is the peak in the trough. What generally quants do is they see for that cycle, wait for the cycle for a price confirmation.
Okay.
So that's X and Y coordinates where they match. If you actually get in between that, you're actually going against the trend. You're not able to understand why it would do that. And then when you're actually short and it goes up 30% and then it falls, you're right on the trend, but the timing is wrong. So people say that the timing is not accurate or something like that. So anything and everything is possible. So even in Indian horoscopes, we actually see when a child is born or something like that. So we see the location, geolocation, and the time period down to the second. So from there, we start projecting which year there would be a vibration, or we would have a good time or a bad time, something like that. So all markets do. So everything, we are all created with atoms and vibrations. So all you have to figure out is even price to earnings has a cycle. I just wanted to show it. I wanted to start with that. So that's the real idea, that it's not just price to earnings. It could be a weather pattern. Weather pattern could peak at a particular point or turn around at a particular point. So people say it's climate change, but is it? Do they really understand what is climate change?
I think they said that Gans spent some time in India. Is that true?
That's correct. I've not seen it because I'm not 100 years old still. But
you didn't meet him?
No, I didn't meet him, but I actually dreamt of him. I did dream of him. So that was 2009 when I actually got it. And then I was mesmerized with this. So that's when I found out, oh my God, this thing actually works. Because I was a little bit slightly good at calculus and trigonometry. So it's all about angles and pressure points. And GAN was actually studying the same thing. So it's a planetary action. What is the behavior at a particular point? People get wild at a particular point. What actually affects the markets? If you really see most of the learnings in markets, if you go back pre-1940s, you'll actually see that it still works. It's plain vanilla. So what
natural
right
law.
now? Yeah, it's the natural law. How do you know that there are 30 days in a month? Anybody in the panel? They can answer it. Why there are 7 days in a week?
It's a number of completion.
Yeah, it's some kind of start. If it starts, it completes. So something like that. It's like these gears.
But why 7? Why 7 for a week?
Basically, 7 is it's like it follows the lunar cycle. 28 by 7 means 4 lunar cycles.
Got it.
So it goes with the birth of the baby or a kid or something like that. And if you calculate that, it actually has a rhythm. So it's cyclicality. It keeps moving up and down. That's why even pi is nothing but 22 by 7. So you'll find it really strange. Why there are 21 days in a 21-day moving average or 20-day moving average? Why do they use it in the Bollinger Band?
Why they use 21?
Yeah, 20 or 21.
I don't know.
Basically,
3 weeks.
There are only 20, or on an average, there are only 20 days in trading days in a month. Yeah,
that's
8 days in a
got
holiday.
it.
So it's a weird thing. It's a pattern. So and if you
I learn from you every time you're here.
Okay.
I never even thought about it. Why it's so popular to use 21.
Yeah, because it's, and even RSI 14. Why would they use RSI 14 on a day? Why 14? It couldn't be 13.25 or 15.6.
Well, people have tried to convince me to use different days on my RSI instead of the standard 14. But why 14?
It's the lunar cycle, nothing more than that.
2 weeks.
It's slightly above the lunar, which is 14 divided by
between
21.
new and full moon.
Yeah. Basically, 14 divided by 21 is approximately 0.6.
Khalid El Ghuli uses a 9 for an RSI.
It's possible. 9-day cycle is something like 2 weeks. 5. Okay. So it's like a sync. It's not important indicator use. You just have to pick a day. That's why most of the algos or other things, it goes into Monday, Tuesday. They place the trade on Monday and they finish on a Wednesday or Thursday. Certain programs work on that. So that's how it is.
So what are the big trades for this fall, Ronan?
I think I'll discuss that one by one. What's happening? The biggest trade, I would say, the theme of this whole thing will be long crude oil if it crosses 82 and short all indices. And we are actually going to experience something like a big sell-off between now and November 1st. Why? We'll come on to it one by one. So this is PE ratio. You can actually see, I just wanted to start off with something different. So as we discussed last time, Fibonacci is actually gave a signal on February 22, just like September 2008. This is the Dow cycle for the last 100 years. So it flashed September 2021. Many people have that we actually down more than 4 or 5% from all-time highs. The high was made in December, I think. Okay. So we can check in the next chart. You can see it very clearly. February, we started crashing. September, we hit that high around that point. Now it's actually trying to hold that 33,700. The moment it breaks that, that's actually 4320 or 4300 on the S&P 500. So that breaks. The reason could be because of energy, and the sector is hot. Many people never thought that from $50 or $60 is going to go higher. Now everybody is like $80. So now we have to be very careful with this. So we should see that in the chart. So this is if you are actually using digital stop loss, that is, you can use this level. So 33,777. Every time it goes there, it actually tries to bounce back and to stop a sell-off. You can call it, they're trying to artificially game it, or you can actually say it's just a level which is important. If that breaks, 32,000 will be out in a flash. You can just blindly actually place.
So this is a monthly chart right here? Because I see the big red candle. Yeah.
Exactly. So you can see that it hit 35,651. And these are not like horizontal cycles. This is kind of programmed cycle. So every month there is a value change. So it is not the same thing always. It's not a horizontal line. So,
the first chart, was that the Schiller case PE? Is that what it's called?
That's correct. That's there.
All right. Okay.
So let's move on to S&P 5. If you really see, it's holding that 4,400, where I think even Blake was talking about that 4,420. Yeah, is great. But once that 43.98, it starts trading below it, the next official target is 41.23 and 3,800, and it goes like that in steps. So you can call it waves, wave 3, wave 4, wave 5. But if you use those levels, you can actually start placing better bets, and you can actually use those levels. Hello, can you hear me?
Is a stronger dollar one of the catalysts for this?
No, I think that it has to recall.
It's just crude?
Like, this is NASDAQ.
Yeah, I know. But crude is the major catalyst, so the inflation pressure from energy.
It's actually rate of change of crude. So if you have a rate of change of 20%, that's a lot. That is a lot. Even natural gas, when we were discussing it, was like $2.50, which was in April, and we were talking about 17. It's almost halfway, $7, close to $7.
Yeah, we know that you have sound issues. Well, your next winning trade, you have to do something to, fix. Either get a better internet connection, or I don't know what you're using for a mic, but you're breaking up a little bit. But go ahead, keep going anyway.
Okay. So the NASDAQ is actually the real icing in the cake. So 4,500 is where the break which happens. So this is because of energy only. So once that 14,500 starts cracking, you can actually see next level around 12,800 to even 7,300. So you can see the divergences. Even 1997 Asian crisis, there was huge divergence. Moving RSIs. See the
Okay, I know you're bearish, and I know your numbers for breaking down.
Okay.
Is there still a chance, based upon your cycle work? Because I look at some of this stuff, and I try and look at both sides of the trade. Is there anything that you see that could give us one more marginal new high in S&P, say 100 handles above the old high? I think was 45.50 or something. Is there a shot for one more high into year end?
It's possible. That's what I said. If it holds that 4,400, then it's certainly possible that it can make one last high to like 37,400 or something like that. It's possible, but most of the work which I see, I really doubt it.
Okay.
Because September is a critical month. This is the most important chart, this is debt to US oil, that is WTI. Now, if you really, the orange line, it's threatening to move below that. The next level is $100. Above that $100, it can actually go crazy even to $3 if it has to go to June 2008 kind of things. So, that's where the energy problem lies. This is anyway, federal debt doesn't change. So as long as the debt keeps going up, there is a possibility that oil prices will adjust to that, but technically it's breaking down. Okay. So this is oil. You can actually look at monthly pressure points. So the minute it broke above 77.8, that was it. That it's going to go to $88, $89 first, then 97. It's just going parabolic. So there is something happening behind the scenes which says that even the dollar reverse.
When we pull back to the broken trend line before that happens?
It's possible. That's why it's $0.50 stop loss. $80, you can actually keep it as a pivot. The reward is in the long side. So you keep $80 as a stop and you can actually just play it. On a monthly cycle, you can be very bullish till it's 77.8. The reason is that if everything starts selling off, I don't know if oil will hold up or not. But there is a possibility that oil will hold up and start hitting 127, 130 before it reverses. So this is again same broken down levels. You can see it tested that $78 this year, then came back all the way close to 60, 68. It actually just started going up. So 77.8 next level. We could actually be seeing $99 within this week or next week. So it's about rate of change. Now this is natural gas. Now natural gas is taking a breather. So because oil is taken over from 74, 75. So natural gas is actually underperformed by 20% against US oil. But you can clearly see that once it broke through 3.74, it is actually hitting 7.24 next. So it's doubling. So it starts going up to 10, something like that. So each slab is something like $3. So energy is the real theme. And you can actually see the breakout from 2006, 2008, where there was a great crash of hedge fund, which actually was long natural gas. So that's around $12. So my guess is that if natural gas has to go up, you have to buy above 5.9, and till mid of next year, it'll keep going up. So that's a particular thing. It could be a 7.2. So I'd watch for risk levels.
Okay. So is it possible natural gas could pull back to like $3 to your next cycle?
I doubt it, but possible. Why? Anything is possible in the market.
Okay. All right.
Here's evidence that it will not pull back because CRB actually has broken above 200 or something like that. So we are targeting something like 300. So CRB is a basket of commodities. So if 300 is from here, we are actually going to get 50% movement from here, approximately. So can you hear me?
Yeah, got you.
So this is a GAN fan on the same CRB. You can see over there, the breakout was elections. So once that actually broke, it just didn't stop from there. So somewhere April to July next year, all commodities actually outperform by 30 to 50%. I'm talking about the markets. So this is the real pattern which I'm observing in crude oil. This is actually got a Gann grid. So first target is, you can actually see each grid, it's moving at the rate of $7 for each grid. So it can hit 130, pull back all the way to 95, 90, and then double up from there, which is around 190. This could all happen very fast. As you can see, the black line, that's actually the time within which it is supposed to happen. So I'm expecting 130 at least by Feb 2022. We'll see how it goes.
Wow, that's 4 or 5 months, right?
Yeah, not much. Now, this is the real hint. US oil actually, the WTI is actually out, it's going up with dollar. So that tells you that the dollar doesn't matter. There is something else happening behind the scenes. So even if the dollar actually outperforms by 10%, there is a possibility that this is breaking out. So this is nothing but WTI into DXY. So it's showing a lot of strength. And the cycle point was lower. It's not higher. So it's kind of highly inflationary. This is one more interesting thing. Crude oil into USD CAD. So if USD CAD has to go down, that means Canadian dollar has to appreciate. That means oil is going substantially higher. So if a parity hits on USD CAD from say 1.25 right now, it could be 130 or 190 before the dollar turns around. So you can see that over there. You just divide WTI, this 130 divided by 1.04 or something like that. That will be the value of crude. You with me, Dale?
Yep.
So this is extremely short term for crude oil. You can use these levels, 79.8. You can keep the stops, keep running. I'm looking at 99 within very short period. So it'll catch everyone's attention. So what is the risk reward? 0.5%, 1%? That's good enough, I think. Hello?
I got you.
Yeah. So
I'm writing things down.
Now there's one interesting factor which is happening. Everybody's arguing that look, everything is going up. Not really. If you actually study 1970s to 1980s, copper actually briefly outperformed and underperformed. So here, what is happening from 2003 to 2020, actually the WTI underperformed against copper. Now, it actually, energy is outperforming even copper. So this is a pattern. Can you see that pink line, which is actually breaking out? That means copper could be not going up so much if it crosses 19 ratio, which is like 25. If it hits that 25 mark, that means copper could be like 10% up, but crude oil could be like 100 plus, something like that. Okay, so 19 is that ratio.
Long oil against everything.
Yeah. Basically, it's oil. Oil is the blood and soul of everything which moves around. They call it shortage, but is it really shortage? Now, this is the real FX move, which I'm actually thinking, what if USD yuan actually goes to 5 from 6.3? Because nobody in the media is actually talking about if USD CNY actually starts appreciating against the currency, against the dollar. So how deep could it go? And we have seen it time and again in 2008 also, when there was a spike in oil. Crude oil was, USD CNY was actually, CNY was appreciating against the dollar. Every time it did that. You with me?
Yep.
So what's the next chart?
Okay, you're getting some nice commentary of, some good insights into the future. So you're...
Okay, this is a real good one. So this is a real good one where we actually see that what I did is the main chart is Euro USD divided by USD CNY. So every time it actually went up, crude oil actually went up. That means one of the entities actually started being inflationary. If Euro is going up and USD CNY, so you cannot actually see dollar index is going up because Euro is going down. That could be a different problem. But what if USD CNY starts appreciating? So that's what causes this inflation you can see over here. Now, what I did is to check out these cycles. You can see that Euro is long Euro USD CNY. Now, if that 0.27 mark has to hit, what should be the value of Euro? So what I did is a simple math. Let's say phi is the USD CNY into 0.27. 0.272, 1.37. That could be the value of the euro. So it all adds up that next year is going to be the real big change. After that, the euro could actually go to zero or whatever, depending on what they actually do with the jabs and other things.
Okay.
So this is again the dollar. US dollar is still not breaking out. It's still very sticky around the 94.7. You can see that when there was a crash last year, it actually held that point, 94.7, and is actually testing on top of it. So
that's right.
Yeah, we're not sure that, and you can actually see the RSI is actually topped out in the daily time frame. So you have to be very careful that 94 is not bullish. So you have to watch what the currency is doing. If the copper is falling or crude oil is actually backing off, that is a strength in the dollar, not otherwise.
So if we got a pullback to 92, which looks like a big area to you,
do not buy it.
Huh?
Do not buy it.
Okay, but if we got to pull back to 92, maybe that would be enough to lift the market to one more marginal new high.
Possible.
That's what I'm thinking. It's not going to do it with the dollar exploding. And now that you've come here and shown what a critical area it is, I mean, I know Blake's been shown the 38% fib retrace there, but yours isn't based on 38 fib, is it?
No.
Yeah.
No.
Okay.
So this is
then
dollar
you're looking
index.
for 80. Wow.
I'm looking for 82 by next year. So that's around 10%. That's good enough, I think. Most currencies don't move more than 5% or 10% per year. So if you really see euro, actually it's down by 5%. That's it for the year. So it's kind of contained, and you can see inflationary pressures start only if this 82 is broken. You've seen it time and again in 1988, 89, 87. Then the real inflation came post 2006 actually. So this 82 to 90 band is the real decider. And you can see that semicircle, it actually completes the high. It joins around Feb or 2022. So July 2022 could be 190 oil. We don't know. Okay. But that particular point of 94 is very critical. You have to watch it. For those people who actually want the lows, exact pressure points, this is the chart. So 94.84, yeah, it's very bullish. But if it doesn't cross that and it starts breaking down next time, 89, do not catch it. You can easily catch it around 89, 82 or 83, which is a trend line. We have to decide at that point what exactly is happening with commodities. Maybe commodities peak at that point, and we have another route of deflation like 2008 suddenly.
Okay.
So same thing goes with 1985 pullback. It needs to recog. That means it has to hit that pressure point where everybody says dollar is going to collapse. And at that time, it just lifts off. So that is what I'm anticipating on that. This is again copper chart, which we were showing 5.6. Yeah. It's not completed the pattern. This is a parallel channel, if you see copper. So it could hit that 5.6 and still underperform crude oil. Because if crude oil doubles and this thing goes up by 30%, you can technically be long oil and short copper. So it's not you're going to make money. So for those people who want exact levels, 4.6, 4.29, and 3.98. In July, if you observe that there was a rout in all markets, and copper stopped exactly at 3.97, 3.98. So somebody pressurized it, and you can see that in 2011, that was a high. So these pressure points are easy to know that if these points are held, then they're actually changing the narrative behind it, that it's not just time.
Okay, well, you have time for one more look, and then we have to wrap it.
Yeah. So 10-year bond yields, this actually is going to take off. So 2.14 is where all the central banks starts panicking. That means oil has gone above 82. It's actually inflation. And you can actually see British pound yields also is taking off. We can see that in the next chart. And we have I have a target of something like 2.5 to 3 very easily, because if oil is going to 120, then all yields are going up, irrespective of what is going on. I'll show you quickly. I'll run through British bond yields. You can see it's breaking out in a long-term channel. So nobody can imagine a 4% yield on a British pound, British UK yields, and it's actually forming an impulsive move. You can see over there. There is a triangle from
buy real estate if you're right.
Yeah, but it's better to buy something in oil. So that would be better, and hedge it with real estate. Maybe you can actually buy a real estate and pledge it and then buy some oil with it.
I would think that would crater everything, 11% rates that you're showing as a possibility.
No, but fixed rates are there. You don't take a floating rate when you borrow.
Okay.
So this is very important. If this is a financial crisis or a monetary crisis, then gold would take off, because gold to crude ratio is around 30. So anybody who wants to be bullish, they can actually be long 1755. That means once it takes out 2010, then you can actually be just close your eyes, be long. It could actually go to $8,200 according to my calculation. So you see that 2060, it's almost like 4x times, and this could be in a very short period of time. It's actually very bullish pattern. So
well, that's what happened in 79. I mean,
exactly.
And 80. Yeah.
It was 1976 to 1980. That was a 4-year time. So right now it's like 2021. We could expect that by 2025. So parabolic rises. Again, the euro is actually very critical at that 1.156. Will they allow it? I don't know. But 1.1516, you can see that long-term support coming in over there, and the channel breaking down. So this, if euro is breaking down and gold is going up, that means it's a monetary crisis. Immediately you understand that they're going to actually introduce CBDC, because even in India, they started it in 2016. Not many people know that the cash ban actually started in 2016, not 2020. So
they're going to issue what? An SDR?
Yeah, SDR or a CBDC, central bank digital currency, where actually they don't allow you to buy gold, silver, or any inflationary thing which you can hedge it with. Because even government of India is actually trying to launch CBDC in December 2021. So there is something in sync with other central banks. So they are moving forward with this. So that means that is the precise reason gold and Bitcoin actually took off. 2016, if you carefully see Bitcoin, it was around $200 in the beginning of the year 2016, and it started skyrocketing post demonetization.
All right, show one last chart, and then we have to go. And why don't you show us Bitcoin? Since I saw that you were kind of bearish Bitcoin.
But I'm not prepared for that. I just want to show you more than Bitcoin, which is soft commodities. This is lumber.
Right, we have to wrap.
That?
It's after 6.
I'll show you one last chart of wheat. Actually, this is wheat. Actually, it's breaking out a larger trend line, and it could triple from here. So 743 is your base level. It's going to go to 2,400 or something like that. It's doing something what lumber is doing. Yeah. Okay. So 743, you can have a stop, and then it can actually fix for 2,400.
Yeah. So what are you going to do? Eat your money or Bitcoins at 20? I mean, there'll be no food.
I would trade it. I would actually be long gold or oil or any other soft commodities like sugar. No, I would actually do some physical trading in that. So sugar or wheat.
So why do you have a silo?
Yeah, kind of.
You could store it.
It's like a shipment. We can actually arrange for that.
You're like Joseph. You're like Joseph in the Bible. So you're going to buy, huh?
No.
Yeah. Anyway, so wow, that's all I could say about this. All the charts you've shown today, buddy. Thank you so much, my trading warrior brother.
Actually, there were 34 charts, so I've shown. I think I covered most of them.
Yeah. I mean, great. I'm going to go back and watch this one over again.
Yeah, sure.
To catch it, because so much and compressed in this amount of time. So the best way for people to follow you is at Ronit9Q.
Yeah, that's right.
Okay, buddy. Remember that you're Elvis and I'm, what was his name? What was Elvis's manager? What was Elvis's manager?
I have no idea.
Okay, well, it was like.
But I thought you were Highlander. You said that you're 55 and it was 1929. So
not the colonel. Was it? I don't think it was the colonel either. Was it? Maybe it was. Yeah. Okay, Brock. Anyway, I'm the colonel. You're Elvis. Thank you for shake, rattle, and roll in the markets. Colonel Parker. That's right. All right. So thanks, Ronit. And everyone, you could join the team in 11 minutes on the Morning Edge. Hope you enjoyed Ronit's stuff. It's great. You know, he sends it to me almost every day, his stuff. So my head explodes every day when I look at his charts. So
really?
Anyway,
I'll send some more.
all right. Thank you very much, Ronit.
Thanks, Jeff.
Good hunting. Adios, everyone. Have a good day trading. Take advantage of the offer and sign up so that after we're done here, in 10 minutes, you could hear Steve and Blake and everyone, and they'll field your questions. Adios. Oh, I forgot.
Guys. Thanks.
I forgot. Yeah. And don't just count your pips, count your blessings. I'll see you guys. Adios.
Thanks. Bye.
Bye-bye.
Bye.